So funny enough, Scan and Go is a feature that is now within the Sam's Club mobile app. It also sits within Walmart, and it's a benefit for people who are on Walmart Plus. There was a small hackathon that was done at Sam's Club. There was these two engineers who built it, and essentially it was a self-checkout app. And I was part of the founding team to help drive DTM. We launched it in a few different stores, but really what it's meant to do is help alleviate frustration that happens with the wholesale model. That product grew from zero to about $30 billion goes through that app, estimated a year, which is generally like a third of the revenue. And it's a really good experience, but it did take a lot of hurdles to kind of overcome and drive growth.
Well, thanks for coming on the podcast, Rick. You have a lot of experience in go-to-market, in big tech, in the Bay Area, as well as globally to an extent. I'd love to get into your background a little bit. Could you maybe just kind of set the stage a little bit as to who is Rick Tone? How did you get here? And where are you headed?
Yeah. So my name is Rick Tone. I've been in the Bay Area for about 10 years. I grew up right outside of Chicago. I've been growth in GTM for about 20 years. I really focus on helping companies grow and unlock growth and scale revenue. I've worked at companies like Meta, Sam's Club, Walmart, Under Armour, Walgreens, and some high growth startups. My approach is generally just focused on finding opportunities, and we'll kind of get that in a little bit, and then accelerate them when they arrive.
Love it. Can you share the Scan and Go story? What worked, what didn't, and what took years to get right?
Yeah, so funny enough, Scan and Go is a feature that is now within the Sam's Club mobile app. It also sits within Walmart, and it's a benefit for people who are on Walmart Plus. There was a small hackathon that was done at Sam's Club. There was these two engineers who built it, and essentially it was a self-checkout app. And I was part of the founding team to help drive DTM. And we launched it in a few different stores, but really what it's meant to do is help alleviate frustration that happens with the wholesale model. Not all of your listeners may be close to a Sam's Club, but they may be familiar with Costco or BJ's, depending on where they're at in the country. But the lines can be quite long. And one of the unique things about that model, the wholesale model, is they actually have an exit greeter. So essentially, it's a perfect opportunity to have a digital checkout app to where someone can self-scan, and then the greeter will check things and make sure there's no theft or fraud, and then walk out. But that product grew from zero to about $30 billion goes through that app, estimated a year, which is generally like a third of the revenue. And it's a really good experience, but it did take a lot of hurdles to kind of overcome and drive growth.
How long, what's that time frame from zero to the third of their revenue?
I would say 4 years. Early on, the first generation of users, call them digitally natives. They represent about 10% of the TAM. They really understood the value proposition. They were kind of keen to try things out. That first 3 to 5% went pretty quickly. And the way that we looked at the percentages was like a share of total revenue within the store. It was pretty quickly just because they tend to be more literate in terms of how to use apps, do cart checkout. There was also a lot of issues early on with coverage. There are certain items that you couldn't actually put on Scan and Go. So example, like weighted items. So if you were to get like a potato salad or like meats, and the meats were like a pound, but they were slightly over a pound, it was really hard to kind of drive that compliance and getting those items on the app.
What are the key signs that a go-to-market initiative is just in plateau versus truly stalling?
Well, in the case of Scan and Go, we actually had a large issue. We just hit a plateau in terms of how many people could essentially more of that digitally native group. What we had to do really break through. But the earlier signs for us were that there was a high frequency and high repeat rate. When I talk about high, if you get 100 people who use that feature, 80 of them were coming back. So 80% to use that feature. And they were using it as their primary means under certain aspects. The aspects were, if their carts were bigger than 10 items, they would use it. Lower than 10 items, they'd use self-checkout. But we were noticing that those trends were staying pretty finite over a larger period of months, especially as we graduated to new markets. But what we were having problems with was trial, getting people to actually use it for the first time.
How do you separate feedback loops between early adopters and the mainstream?
So we started breaking them out in cohorts based on time bounds, based on certain demographics. So we're using a bunch of ML to essentially say this is a group of early adopters, digitally natives. These are next generations. They're nascent. And then we started just breaking down the TAM in different components. And then we started looking at people who were using different tender types, funny enough. So we use all these different, now in hindsight, smart and not so smart moves to figure out, how do we actually move the product along further? And then what do we can do to drive more awareness? As we were trying to figure out who these audiences were, we just realized we just need to just completely obliterate them with signage. We were putting like signs in every one of the high frequency items, like literally we were hand making signs, put them in the Dallas location and Vegas stores, essentially say download this app, download this app. And we were doing pretty disruptive tactics to break people's peripheral planes. Most people when they shop, they kind of shop the outsides and they don't go inwards. So we were intercepting them with like a cart full of snacks. We know that like the wholesale model has like free things. We literally had people dressed in like superhero costumes. We're using scents, like we were piping in rotisserie chicken smells, everything to just try to get people to understand the value proposition and try it for the first time. And then what we were also doing, we found to be most successful, is we were just giving people money. So whenever the lines got big, we made these tearaway cards we give to associates, and they give them that card, and we add $5 to their account. So we're literally just saying, hey, if you want to break this line, you can do it by using this app in the future, but you're going to wait 10 minutes.
I love the creative approach there. Approach is plural. I remember early in Lyft's days, they were handing out free ride cards. I was at Art Basel, Miami, and they're just handing out like $10 or $15 rides just to take Lyft, and that kind of got the ball rolling for them. But I don't think they played around with scents or superhero costumes. A missed opportunity. So to get meta, I guess, pun definitely intended, you're also an advisor for businesses, business owners. How do you coach founders to think about step changes in growth, especially when nothing seems to be working?
Yeah. So, one of the things I've benefited from my career, I spent billions of dollars in media, driving different tactics, but I also am very cheap, very frugal. So I was actually talking with a founder earlier today, and they were like, well, how do you get virality for cheap? I'm like, well, one time I was at Clutter, I joined this program for like 20K to get on a well-known celebrity's post. And then essentially the person could win a shopping trip with this person, but there was like 50 other brands that were included. It was super cheap. Our follower count went up, and we were able to remarket those folks. Did a bunch of different tactics to be able to drive growth in different ways. But when I was talking to this person, I was like, hey, what are you trying to accomplish? What's your success metric? What's your fail metric? And I told this person, I was like, hey, your goal is to get people to spend 30 minutes a day with your app. I was like, just figure out that. And if you get there, then you'll be successful, because all other stuff in terms of monetization will happen when you have the users.
hmm What's your framework for defining success failure at different stages?
So I have two frameworks. One for startups and early stage things I call good money, bad money. Good money is like you're investing in things that are longitudinal. I.e., I'm like one of the things that I was really keen on when I was at Sam's Club. I was like, all right, I want to convert offline shoppers to online, because if I know I do that, they're worth more money. So we're looking for these aspects that are really causal towards future growth and be able to drive like stickiness within the business. So that's like good money. Bad money is like when you're spending money and you're spending effort to do something that has very low scale. And I'll give you a few examples of that. Like, I was working at a big social media company, and someone on the team wanted to run this campaign for a large population. And I asked the person, like, hey, what do you think this is going to produce in terms of results? And one of the things I always ask people to think about is like, what's your time worth? And then what is it going to do? What's your success metric looks like? So I think some people get like really held to what the idea is and what they want to accomplish versus like what is actually going to be worth. So good money is doing things that are longitudinal, helping the business. Bad money is where you're spending time so you don't actually know what you're trying to do. You're just doing stuff. Yeah.
Great. Yeah, thanks. Can you walk us through that moment when a team member launched a campaign without thinking about the likely results?
Yeah, this happens often. And I'll give you go back to that example. We were having an issue with data capture for customer contact information. There's not a lot of recency. Recency is really important because this team was doing SDR, basically outbound calls. They had planned this large campaign to about 1 million users. They're basically asking them to update their contact information. And this person brought this idea to me. I said, okay, what do you think it's going to produce? And she's like, she didn't think about that. And I was like, well, how many, like, if we're going to do this effort, we're going to spend all this time spinning up these teams and processes, fixing this thing, like, how many people are going to update amongst this million population? And it led to a really productive conversation around, like, what's open rates? What are click-through rates? What's the value exchange? What are kind of like messaging? And I think as a whole, what I ask people to do is within my teams or people I'm working with is like, don't be shy at like creating very loose definition of what success and failure looks like, and you'll get better over time.
Why do even seasoned operators fall into the vanity metrics trap?
I think it's convenient. There's benchmarking that's often happens. I think most people are trying to look at their business as being linear and stepwise. So you'll see operators who will essentially say, "Here's how much GMV I need to provide," versus how many people are actually doing certain behaviors. I.e., I'll give you an example. So we were at this startup in the moving storage space, and they had been at a point where they needed to update their pricing pretty significantly. And it was something that they're like, hey, I need to make this business more profitable to be able to put us in a better position. But they were very narrow in sense of what they wanted versus what the market would give them. And part of the realm of being in a capitalist society is we have competitors. And there wasn't not enough thought about benchmarking and saying, all right, well, if we're going to offer this premium service, we have to and have a premium price, then we have to also understand who's in that category, who's below, and then willingness to pay. And if you don't do that, then you're going to get wiped out to some extent.
What should a Series A startup be measuring versus a pre-product team?
Yeah, I think it's come down to like, what does good look like? So going back to this example, who I was speaking to earlier, they're launching an experiment. I said, what would a quality experiment look like? Like if we had 100 users, I was like, okay, great. What would bad be?
Mm-hmm.
And they're like, if we had less than 100, I was like, okay, that's a start. And I said, well, what do you expect when they go into this product? Like how much interaction? And then like, how do you expect people to navigate when they get 100 hit? They didn't know. I was like, you should define that because all your sub experiences behind that will really drive like what that experience looks like for that moment. And it really forced the conversation like, all right, how is this linking to what you want long term? Are you learning anything that you could use or discard? In my businesses that I've worked in, we would run like a couple hundred experiments a month, knowing that like 2 or 3, maybe 10 ideas are really good, and most of them are pretty bad. We'd celebrate the thought process around it more so than the outcomes.
How do you validate pricing without alienating customers or tanking conversions?
It depends on the scale of your business. In the case of that company, you'd have to do market rollouts. You have to do willingness to pay. Ideally, you would benchmark the marketplace first. You essentially pay someone to call all the other business, get a quote for a certain parameter. So let's say you're doing a 2-bedroom move, 3-bedroom move, 1-bedroom move, get a quote within certain distances to understand where you sit.
Mm-hmm.
And you can use services for that relatively cheap. And then you pull your services, like people who purchase. Would you have paid more? Would you have paid less? Why'd you choose us? Because you want to go with some confidence. Otherwise, if it's pricing and it's on a site, you can play around with it and if you have enough traffic. But if you have very little traffic, that category does, then you have to be very thoughtful in terms of what you launch with.
There's a gentleman that we interviewed a little while back who does websites, and he said that he increased his conversion significantly by asking every client that did convert, what almost made you bounce? And then he just kept like iterating on improving the model that way. I forget the number off the top of my head, but I think it was north of 30% improvement on his conversion rate. So that also helps, I heard.
Yeah, I think there's a lot. It depends on the industry. Ultimately, e-commerce, a lot of it's just fast. We're trying to get people through the process. What we were doing early on in the Samsco days, we're actually just putting everything up front in kind of breaking experience. And we said, here's all the stuff you bought in the past, just quick add them. And that's all we cared about. It's like, we want you to build your basket rather than try to get you to convert a single item because that's not a good business.
That's so smart. I never heard it from that perspective. I've been on the receiving end of that, but that's a really interesting way of doing it. When should founders push the market versus pivot to meet it?
I think it depends on the demand of your product. I think the pushing it depends on how revolutionary it is. If it's like a commodity and or you're selling other stuff, it's hard to really bend the market when if you're selling the same lotion that everyone else is doing. A lot of it comes down to price and to inconvenience. So you have to assess where you're at. And I think one of the things I've noticed with like leaders and founders, some of them just have this implicit bias around like this is my company. I think it's great. Everyone's gonna love it. But you have to be rational at the same time, which is like, all right, how much are people willing to pay this? And then like, am I being realistic? And that's the big one. I think it's helpful to try to push it up because last thing you want to do is have a 1-2% margin business. You'll have to be the size of, you know, Walgreens or sorry, Walmart to be able to have a good profit.
Mhm.
But if you're not, then you have to kind of figure it out.
That's so underrated, what you said right there, because it's so true. There's this superposition between alignment. You and I are having a conversation and more or less understanding what each other is saying, but really we're living like different realities also at the same time. And then for each of us to come up with something, there's a lot of like implicit bias in doing that. Like we're personally involved in creating it. Like this is what I think it should look like, or whatever. And you have this sunk cost fallacy, the confirmation bias, et cetera, et cetera. And so by the time you get to the point where I'm asking you to buy it, we are so far away from our our respective realities that it's like it's one thing to say like go David, you can do it, to another like here, have this amount of money for it. And I think there's I'm curious what your thoughts are. Turn this around in a question. I don't think there's any way around that than testing. I don't think any amount of like strategy, getting it right perfectly before you roll it out to market is going to give you illuminate the blind spots or give you the data that you need in order to strike that balance. What are your thoughts with that?
Yeah, I agree. I think you need to have a hypothesis of why you're doing it. You know, if you're essentially saying, I'm doing this because XYZ, then you have to take what the market gives you, but also like hold the parameters of what failure looks like. This is
Hmm.
what I've noticed is a lot of people will not give up on an idea because like it hasn't been enough time for it to change. It's like, well, some things are just really bad ideas. And one of the things I would often do with people if they had an idea, I would just have them like print it up and I'd have them show it to them. I would say, print that up and show it to someone random, like random people on the street, and just ask for their feedback.
Hmm.
We would do this even at big companies. So, if someone say I have this idea, it's like, okay, print it up and ask this person specifically. And like, well, why you tell me ask? I was like, they know nothing about your work,
Hmm.
and you want someone to see it and understand it from the get go. And if they don't, and I was like, and be open for feedback. This is one of the things because people try to defend it, which I think is ridiculous. You know, like if someone's going to give you their time, a piece of their time, and you should be able to accept their feedback and listen.
That's so smart. Yeah, there's a tendency to like explain why your joke is funny. It's like, no, you're not getting it. And it's like that totally kills it. It's like just take the data and iterate. You shared a lot of great methods so far, but I'm wondering, is there another underrated method you'd recommend to validate product market fit early?
Early, it's tough. I would look at like these metrics. I have different models for kind of bigger companies, which I think at bigger companies, a lot of them lack like a framework for how you think about it. But for early founders, you really have to push through a study user base, but break them in cohorts.
Hmm.
Like the early adopters will always be the ones who are seeking things out. With the AI tools, you can actually do a lot more and treat them like a coach and a guidance along the way. And I've been doing that personally for projects. Just
Hmm.
like, hey, this doesn't make sense. Can you just give it to me straight? And it's kind of weird that you're treating them like a human, but it's a good way to pressure test using obviously tons of bits of data.
That's a good point. What's the most misunderstood part of growth right now? Growth in air quotes.
Yeah, I would say it's super linear. There's been a bunch of people who've worked at this big social media company and they left and they went off their projects and they said it's way more difficult. It's like, well, sometimes you get like super lucky, and it's not really easy. And I think most people just think that you're going to launch something, and because it's a good product, that everyone's going to love it. And I would say even more now, when, you see weaker consumer demand, weaker spend. If you charge people money, like there's a lot more review of how they're going to spend that money versus before. They're not going to just trial things that they did before.
You have a very methodical, analytical approach. It sounds like the scientific process where you test a hypothesis, testing the null hypothesis. Do you think there's an element of luck to getting it right, or is there always a way to crack the nut?
I think the best stuff has luck, but it also comes with discipline. You know, often I would have these sessions with my team and other peers, and we just plot. We just like literally have post-its, and we have people write down a bunch of ideas, and then we just start grouping them. Then we just rate them on impact and feasibility. And most ideas are bad, but there's usually like a couple, two or three things, whether it's promoting, building a feature, doing something that just breaks through. But you just time box people within like a very stressful way. It's like 3 minutes, 10 post-its a person, try to be decent. And some of them are just meant to be jokes, but it's meant to be a fun exercise.
Yeah, it's kind of like design thinking. I saw like IDEO do that for one of their exercises as well. They have a certain time limit and have to put like post-its on the wall, and just it really kind of reduces, I think, or it the inhibition to just try things, not worry about getting it perfect because the
Well,
data
no,
comes in
the,
testing.
the bad ideas, like there's one of the ideas was around like cakes. It's like, oh, well, we need to make sure this is compliant with like cakes and a few other things. We're like, well, like how much? So when you kind of look at it, it doesn't make sense. And then you spend time sizing things. Like, oh, this is actually pretty big. Fuel was a big one for Scan and Go.
Mhm.
But well, we just need people to have fuel. And it's like, well, that's like a way separate experience. You have to get new hardware, but end up working.
What is one hire or team decision that changed everything?
I think it's cultural. Um, I think in general, you want ideas to come from anywhere, and you also want people to speak openly and freely. Um, if you're running a org or a business or a team and you're just tops down, you're likely missing a bunch of things because most managers as a whole, and most leaders and founders, they're not as hands on. They don't have explicit knowledge in their areas. They're not getting the day to day, and you have people on your team who did that.
Mhm.
So one of the things I'd like to do, I actually 25% IC. That's been my rule for the last 10 years. So I assign myself IC work for like 25% of the time. So I'm actually working alongside the team. And in most cases, I can do all the work the team could do without like certain things like how to operate certain systems.
Mhm.
But I could do their job if I needed to.
What is one startup mistake that you're most forgiving of, and one that you're least forgiving of?
Least forgiving is easier as accepting customer feedback. Uh, most forgiving is pricing. Actually, I think pricing you have a lot more flexibility to change it. You can go up and down. People accept that. Um, but customer service, I think you die by that if you're not creating good business.
Mhm. You're quite the cook. That's one of your creative passions. Um, and you've got like a passion for miso, hot sauce, Central Texas, brisket. How has that shaped how you think about growth or experimentation?
Um, well, for me, the most noble thing you can do is feed someone, and my love language is food for people. I think it's good. Um, I would say, it also helps me balance out because most people just kind of use their mind. And if you use your hands, it helps balance things out. So it helps open up a lot of mental capacity for me. I worked in a kitchen when I was in college, and it was like the most grueling work, but it was also most like fun work because you get to
Mhm.
feed people.
Mhm.
We would do banquets for like 300 people for weddings and just like pumping out filet mignons for as fast as you can. But I found a lot of like the solitary of that, if that makes sense.
Yeah, yeah. I started work in uni as a server, so I worked with the kitchen, but I had to memorize a bunch of orders and develop rapport with customers and solve problems. And I think it laid the groundwork for everything else. It's one of the best ways to start in, I guess, life and business. If you hosted a growth supper club, who's getting an invite and what are you serving?
So I usually invite, and so I'm really close with pretty much everyone I've worked with. I would say in general, the people who are on my team, I'm quite close with them. So they usually have like a perpetual invite list. So I usually start with them, and then new friends, people I'm working with, and then people I know who are like certain food. So one of the supper clubs I'm hosting is a tavern-style Chicago style pizza, which is not like the thicker stuff. And I'm
Hmm.
gonna invite probably 50 people, but I have to think about how much like pizzas I have to make because they're
Hmm.
very thin. But there's a bunch of people I know really like pizza. I have one of my really close friends. We don't get season. He's French and he loves pizza. I was like, all right, this is for Victor. So I tend to invite like about 50, 75% are repeats and then 25% new, but I have to make sure they fit within. And then I have a son and he wants to invite his friends too.
That's the most altruistic justification for getting a mansion I've ever heard. It's like I'm inviting so many people over. I need a bigger place. If you
Yeah.
had to tattoo one go-to-market or growth truth on every founder's arm, what would it be?
Just get the number. I would say get the number and it's set the number and then get the number. I would say most people will create these numbers and then they'll give up. And giving up is generally not an option. And
Mhm,
it's it's pretty easy to say that in hindsight, but you really have to find the ways to get there because. And I give you an example. We had this goal for that 30%, and I kept on saying every year like, "There's no chance I'm going to get that." But I was like, I'm not letting myself say that as a naysayer. And we just
mhm,
kind of push through. Just with any business, you just have to set parameters of what success load. And it's not just revenue, just like what's a quality interaction, how much time on site, what are the things that's really going to drive a healthy business.
mhm.
And then set those and then just be thoughtful and completely reflective upon what's going to take to get there. And if you're capable of doing it.
Why do you do what you do? And what I mean by that is you're working or have worked with some of the biggest companies out there, like you say, spending billions on marketing. And yet you also advise startup founders. That's like two extremes of the market. What drives you with that?
I like to see people be successful and I like the chase of driving impact. Um, I really like seeing things grow. Whether it's a giant company and finding impact there or a smaller company, you're just seeing metrics. I like to see when we have created good business. I worked early on and I've worked at a lot of agency work and we won the agency I was with won a gold con and then this company's business shut down a year later. And I was like, oh man, you can make it beautiful. But if it's not on bank, as I thought back in the day, this doesn't make sense. So you want to create
Mhm,
a good business.
mhm,
And I like the chase of it
mhm.
um, of watching things grow and like being successful, hit certain numbers. Um, I'll create like L0 through L3s, and there'll be like 20 numbers I'll monitor and match at any given moment, and just say, all right, are we making progress towards these?
We covered a lot of territory here with go to market. I'm sure we could do a part two at some point. But before we wrap up today, is there anything that we didn't touch on that you feel you really want to highlight?
I would say for any founder or any business owner or any manager out there, just be open and honest about with your team, your investors, people around what you're trying to accomplish. Most people will understand the vision. And the more detailed you can be on what success and failure, most importantly, looks like, and then when you're going to pivot, I think that buys you a lot of credit. I fail at least 50% of the time on the things I do, but I'm very deliberate and I try to fail in small measures. If someone said to me, I want to be a professional baseball player, you know, and they've never played baseball. That's a massive distance of failure. But if you said, I want to increase this number by 40%, and here's the path from there, it's way more logical, way more pragmatic, and people are willing to accept that.
And that improvement year over year or week over week starts to make really significant impact.
Yeah. One business I was in, we set a bunch of thresholds and these numbers, and we hit the health. I left there went from 60 billion to 90 billion, but you can see that that had a healthy business as we left.
Nice. Where can people get in touch with you and follow what you're doing?
I'm on LinkedIn, just under Rick Ton. I also have a personal site, rickton.me.
Great. We'll put it in the chat or the show notes rather. Thanks for chatting with us today, Rick.
Thanks.